So we've got to the end of chargeable gains for companies. We're now into part 3. You'll recall within part 2, we finished on that area of share disposals by companies and the pool. And the final thing I think I mentioned was this idea of indexation and just watching that uplift from event to event, starting with the very first acquisition, let's say 20 years ago. So this links nicely in with this next area. We know that the examiner is highly likely, if it gives us a disposal of shares, to give us bonus and or rights issue. Now in terms of the bonus issue, we know what they are. It's basically just new shares at nil cost, okay? We saw this within the CGT section for individuals. Also note as scrip issues. Now, nothing to be worried about here in terms of difference, basically dealt with in the same way. In terms of the rights issue, same thing. We're talking about new shares at a discount. So either one would be, let's say, 1 for 4, 1 for 5, etc. You'll get 1 share for every 5 that you have or every 4 that you have. So not overly complicated at all. And what we'd be looking to do is to build these events, as it were, into the pool. But note that a bonus issue isn't an event, a rights issue is. So in terms of adjusting events, we'd be looking at acquisitions, rights issues, and indeed outside of that, obviously indexing up to the disposal itself. Okay? Next area for us, now that we've left share disposals, just a quick point on share disposals by companies, and indeed for individuals. The examiner likes it. The examiner likes that area. So as I say, when I think about share disposals by company, the only thing that I'm worried about is, can I get the indexation right? So watch for that. Now again, rollover relief, we've seen rollover relief for individuals. Works, broadly speaking, in the same way. What are the main conditions? Now again, you know what I say about conditions. Yeah? Conditions need to be learned. I'm not going to simply just read these conditions to you. We're sort of familiar with them because we've dealt with this area of rollover relief under the individual CGT banner. So in essence, there's nothing new here apart from the very last sentence, i.e. that goodwill is not a qualifying business asset for a company. But bottom line is all the rest is the same. So they must be qualifying business assets, yeah? Generally speaking, land and buildings, okay? Outside of that, 12 months before, 3 years after. So there's nothing different here apart from the last sentence. So those are the conditions for rollover relief. We sort of knew them. What about the operation of the relief? Again, same deal. So no tax on the gain on the old asset, and the index gain is rolled over by either deducting it from the cost of the new asset, or if the new asset note is a depreciating asset, yeah, let's say a leasehold building, by deferring the assessment for a limited period, okay? And note, in the same way as for individuals, we must be in a position, if we want full relief, in other words, full relief of the gain on the old asset, the full proceeds must be reinvested. If only the part of the proceeds are reinvested, there'll be immediate charge equal to the amount not reinvested. So, in summary, and you may have forgotten a little bit about rollover relief, remember that everything within rollover relief is based on the proceeds, yeah? So, we've got a company, sells an asset, yeah, and makes a gain. So obviously it has proceeds, doesn't it? Let's say that it's 500,000. If it reinvests all of those proceeds into the second asset, then it can shelter the whole gain, defer it, yeah? If it only reinvests part, then we're talking about part of it being chargeable immediately, i.e. the part not reinvested, okay? So the operation relief, exactly the same. In terms of the claim, 4 years, yeah? We see this area of claiming and a requirement to provide details on, okay, what's the limit for claim? More often than not, as I've said elsewhere, 4 years is a good one to pitch for if you can't remember, okay? So in this particular case, a company claiming rollover relief 4 years from the end of the accounting period, okay? Next area for us is this area of reorganizations of share capital for corporate shareholders. Now, what do we mean by that? Well, basically the same. Now, in essence, we know that if we have a situation where we have a corporate shareholder, so I've got a company, it owns shares in another company, and that company gets taken over. We saw those rules in relation to individuals. So the incoming predator, so the company that's going to be doing the purchasing comes in and says, oh, well, we'll give you shares, we'll give you cash, etc. So those are the rules that we need to get savvy on. Now, what I would say in relation to corporate shareholders, is very, very unusual for the examiner to examine what's on screen. It's very unusual for the examiner to examine reorganizations for companies. I mean, if you don't believe me, check back on the previous exams and see how many times it's come up. It does not come up regularly. So for me, the core priority area is reorganizations for individuals under the CGT banner. So I'm talking about the share for share rules, etc., etc. Okay, so I hope that made sense and that your studies are going well. Keep at it, work hard, it'll be over soon, I'm sure. Cheers.